It's the ability to show up even when you're losing, especially when you know you've been losing. That's the real flex with trading. So in today's video, we're going to break down for the final time, because I've tried to record this same video 6 times for you guys, and I keep having technical difficulties, but hey, much like on the charts, we will prevail. So in today's video, we're going to go over a couple setups that I was looking for today based on my weekly game plan from yesterday. And we're not going to let a couple technical difficulties stop us from getting this video done. So let's continue. We're going to hop over to TradingView and we're going to look at a couple daily charts. So really simply, keep it very straightforward. Continuation lower on ES, on YM, as well as NQ. The pair that we chose to trade based on our comparative analysis was ES. It was the second favored, meaning YM was a little better, right? We thought YM would perform a little bit better. However, we did try ES. Now, the logic was pretty simple. At the 9:30 open, you get right here. You see this? There's this little inversion. I didn't have a crazy bias. I had a very simple targeting system right here. I wanted this to close above on this wick. So if you want to take a glance at this, we saw it rally and it got above. So this right here was my first initial attempt, and then immediately wicked and ran the low. Happens, right? Stop was like 5 points or something. Perfectly fine. Target right there, somewhere in here, 20s, 57.20. Not asking much. And then the second trade that I took on stream, and mind you, if you're interested in checking out the stream, the links are in the description. Go through my website. You will find information. You will actually get a 7-day trial. Come trade with us, because this stuff in real time plays out a lot different than what you see in hindsight. So with this setup, the second attempt was actually based on the same, more or less same structure, same location, but based on the 1 minute. All right. And obviously I'm showing you on one time frame. It's not based on one time frame. We're looking at the fact that the daily's been overextended, the fact that we had a high probability draw on liquidity above us. And there was a simple, straightforward logic to aim for a higher target around the 20s, right? 57.20. This was the second trade. So going here, see this inversion right here. And I think, yeah, maybe this will just, just push it. That's it. And my entry is probably right there. Pulls back a little on me and stops me out. That's it. I only risked to like that point, which, you might be saying, oh, well, why don't you risk this? Because I didn't want to risk that much. I wanted to keep my risk within a reasonable amount. Sometimes structure doesn't permit that. So the only thing I could change was size, but I was with the size I was with. So I cannot change that. Now, if I was positioned a little better, maybe in here on the, the right side of the V right here, perhaps I could have rode it up to 57.03. So I could have maybe got a piece, maybe got off right here. But that's just maybe. You don't get paid on that. This is the reality. The reality is I got stopped. I'm 0 for 2 on the day. Doesn't matter how many eval accounts you get. If your funded is down, if your funded accounts are down, that's it. That's your P&L for the day. So you just leave it there. Walk away with 0 for 2. It's easy to recover from that, especially if you have a 2 to 3R target. That's a trade 2. You're back to green. Without any further ado on that, let's continue. Honestly, let's just get into this. So we're looking at YM. This was the other asset that we were basing our comparative analysis on. So right here, we saw that we actually did rally at that same point, this 9:30 open, if we can see right here, right? Right here, you get the same inversion structure. So it sweeps, rallies higher, pulls back, higher low, boom. All the way to here. Not a bad trade. This is exactly what I was looking for in ES. That's it. Not a penny more. Like the same framework. I was looking for a fractal of this, right? The idea being that ES was trading similar to YM in recent time, we'd maybe see some sort of continuation where NQ may or may not keep up. NQ shit the bed, ES shit the bed, YM shit the bed. Happens. That's the order of operations with that. And then what did we get from there? Well, just a permanent downtrend. It just sold off all day. And you might be asking, well, why didn't you flip bias? Well, number one, if I'm 0 for 2 on the day, I'm going to just accept that and I'm not going to try to make it worse, right? That's number one. That's the biggest one. Capital preservation. Biggest thing with trading. And then number two, obviously, if I'm looking at the opposite bias and I don't see it as a short, then I'm probably not going to see it. So why would I continue to push? And, obviously in hindsight, you can see many, many, many arrays respected. So I could have, structured an entry here, here, even this, even right here, right? Any of these little sweeps, maybe that's a short. Any of these, it's just endless selling. Very, very, very obvious trend in hindsight. Hard for me to get on sides with that. I personally need a little more back and forth. This dominant one directional market, it's not something we've seen in recent time, to say the least, right? This is not something that's happened really much. So with all of that, with all of those factors, what I'm looking at specifically, and I kid you not, it was right here on the 7th take that my dogs start losing their mind, and I'm sitting here gonna go check on them, see what they're complaining about. And I had to sit here and contemplate, am I really about to do this video again? And after a few moments, I figured, you know what? You got to pony up and get this thing done, because hey, this video ain't going to make itself. And if this video out there can help one person improve in their trading or avoid some of the mistakes that I've made, then hey, you know what? It's worth it. And I hope it's worth it to you. But like I said, we're not going to let anything get in the way of filming this video. So we're going to continue. We're going to go through a little bit more of what I have in mind for the rest of the week, give you guys some ideas, just sharing my experience. So I never claim to have all the answers or to have the best method or approach for any of this stuff. However, I do have a very realistic experience level. This is something I've done for many years. So it's not something that I'm guessing on. I'm sharing my experience so that you can potentially learn something from this. So if that type of information is valuable to you, I would really appreciate it if you leave a like, comment, share this with a friend. Just acknowledge that I am putting my time into this and I'm trying to share as much value as I can. As generic as a term that is, I'm taking time out of my day to sit down and break down these charts with you. So if you cannot, if you do not have the help, you at least got me. And that's something you can count on. So we're going to continue with this video. We have to really factor in the fact, well, simply that we have some high impact data coming, right? If we go ahead and pull up the news from 2 Degrees. It's one of the best economic calendars you could get, right? So pull this bad boy up, see where we at. News right here. We don't want any of this. We want these two right here. We don't want this or this. We want USD. Let's see, here's the table. We don't want any of this. We just want the table. So what do we have tomorrow? We have jolts. It's like I told you in the video, we have jolts. But you can pull this up for yourself on TradingView so that you know when these dates are coming. Jolts and CPI. Inflation is going to be a huge influence on what's going to happen, right? So this data print, PPI, unemployment, sure, to some extent, consumer sentiment, all of these things are points where the market will react, where liquidity will be injected, so on and so forth. With this volatility, market structure can change dramatically. So even though we have seen quite a dramatic sell-off, there is potential for this to kind of get to a point where you start to see some capitulation, right? Now, that's a fancy word. Really just means that bouncy ball effect, right? Right here, this is all the front side. You're trying to buy this and you're just, eventually you just got to blow up. And the idea is when the pain gets great enough, when enough people have lost money and there's been enough selling at the bottom, that's when you get that explosion. So it's really in these moments right here where the biggest opportunity for bulls will arise. So that's really what you need to be keeping your mind on. I understand it's easy to get into the habit of wake up and sell. But if you're serious about this, you need to understand that there are turning points in these markets. And that is where the asymmetry lies. Right here, right? Who saw this? Yeah, that's what you need to be asking yourself. Who saw this? Because when you get positioned up here, when you're able to de-risk up here, and when you're able to get on sides with the move early, that's where the greatest opportunity lies. Now you need to be asking yourself, where is that moment for the bulls? So those are the last few thoughts that I wanted to leave you with. I hope you appreciate the time that I put into this video. It isn't every day that, I had to do this 7 times or whatever, but in this scenario, that's what happened. But hey, you're not going to get to where you want to go, and especially in trading, if you do not do the work, regardless of the outcome. I could have taken, the first mistake or first time on this video as an excuse to not do it. But the thing is, by following through on the stuff you don't want to do, especially with the charts, especially with journaling. That's where you see the real growth. It's not about what you do in the easy times. Anybody can do well in the easy times. How you manage yourself in the tough times will really define your character in the long term and ultimately dictate how successful you'll be on and off these charts. So thank you, and we'll talk again soon. Take care.